Good afternoon, traders. Good to see everybody in this afternoon. If someone can let me know that the audio is working, that would be wonderful. I see there's a few of you hanging around already. And hey, John, Mr. Hoffman. Yeah, there you go. Good to see everybody. And if everybody could let me know that they're seeing two charts on my screen, you should be seeing an NQ and a MES. I'm going to make sure I'm actually showing the right thing instead of my email or something dumb. All right, perfect. Good deal. Well, welcome. It's good to see everybody around. It's been a while since I've done a presentation. It's been a while since I've done a presentation of any kind. And it's been even longer since I've done one for Optimus. Been deep into this for the last several months. And we just sent out the most major update we've had in quite a while, probably the biggest one in a year or so, or maybe even more. But I want to take some time and we're going to go over this. If you're newer to the program, then you're going to find that I pretty much do things about the same way. We're going to start going through the parameters. It's been a while since we've actually gone through each individual parameter. So we're going to start off today with the dot-to-dot version. And then as we're going through the dot-to-dot version, we're going to pick it up from there. And once we pick it up from there, I'm going to go through and talk about the parameters, the new stuff that's in there. We're going to talk about some of the existing parameters. I won't spend a great deal of time on those. We're going to spend a lot more time on the newer things as they are very new. And they are going to definitely affect the way that you run your tests and the way that you run your strategies moving forward. And I want to cover all that stuff. Then we're going to move to the Omnia, which we're just going to do a brief overview. Nothing major in the Omnia other than the same econ strategy or the econ parameters that we're going to cover in dot to dot. So they're the same methodology over on the Omnia side. And then we're going to talk about ways to load and some other things that I've discovered along the way, and see if we can't get some deeper insight into some things. And I'm going to try to clear up some other issues along the way. Some of you are running into a template loading issue, and we are working on that. Don't have a clue what has caused that. Programmer's been working on it for the last 2 days. And if I had realized that it was an issue, I wouldn't have released it. It ran fine on, I literally didn't see the issue at all on any of the 5 computers that I loaded it onto. So I apologize in advance for the delay for that, for those of you who are experiencing that particular thing. But he assures me that probably by the end of the day today, we should have a patch out. And so for those of you guys that are experiencing that oddball template thing, I don't know. It was a weird thing, but we will have it fixed today. It looks like as of a few minutes ago anyway. So he is deep into it. All that being said, let's go through and check out some of the latest, greatest stuff that we can see in Omnia. We're going to go ahead and jump on this little MES chart on the right, or it doesn't really matter, they're all the same. The chart on the right is the settings that came from one of you guys, as well as the chart on the left. So these are both customer supplied templates. I'm just really looking for about anything here. Let's grab this little MES 3-minute chart, and we'll turn it off. Now, I'm going to start off this morning. I'm not going to spend a great deal of time on Aurora, but for those of you who are newer, just being aware that the way the strategy is working and the way all Optimus strategies work is they are literally reading what's on the chart. So unlike strategies you may have seen from other companies that are more black boxish or things that you don't really actually get to see where the information is coming from, everything in Optimus is actually gathering its information from the chart it is applied to. Therefore, If you don't have it on the chart, if you don't see it on the chart, well, it's a pretty good idea or a pretty good possibility that Optimus isn't seeing it. So this will go for things like the moving average. So you can see on this particular chart, let me blow this one up big. On this little MES 3-minute chart, you can see that there is a moving average applied. Now, when we're looking in the indicators section, this is something that you can turn on and off. And when we look down here into Aurora, all the way down here near the bottom, under the moving average section, you will see, again, if it is applied to the chart, and I'm mentioning this because it has come up several times recently, if it is applied to the chart, then Optimus is using it. Okay, so if you see it on the chart here, Optimus dot-to-dot version is using the moving average. If you want to have a strat that has no moving average applied, simply come in and turn the moving average section in Omnia, or not Omnia, in the Aurora program to none. Okay, so if you select none, it will then disable the moving average referencing. Okay, so that is a very important thing to remember. Remember, it's using what's actually on the chart. With this particular one, let's jump into the meat of the new toys, and then we'll go through and see what else is in here. You're going to find that when you open up the updated version, we are on version, I'm on 14. I think this is the latest. I uploaded this one Friday. So as of Friday, I have not loaded anything since then. So Friday, this is Friday's update for 2 days ago, for those of you coming in later. You will see that in the new version, there is now a place for your system name. So in the previous revisions, we had the setup key. Okay, so all the previous revisions, the setup key was here. We all know about this when you put it in. This is for your licensing. In the new update, there's also a place that your system name is now shown for you. This is done so that if and when you need to upgrade your platform, if you need to change computers, this gives you a way to be able to let Rachel know, or a way to go log into the website and plug in this information. So this information, this is not something you put in, this is something it reads from your system, and you're able to gather that, and that tells you what your computer ID is attached to your license. So that's what the system name is. Again, this is not something that you specify. This is something that's specified on your PC. So you can see in this particular case, I named this one probably 10 years ago. This machine's old now. So I called it Ron PC way back in the day. Yours might be something different. I'm sure it will be, but that's what this parameter is. So this is new for the latest updates. A little further down, we now have the ability to write in the log or not write in the log. Several of you have applied back over the last year or so and said, hey, I'd like to be able to see stuff in my log, or I don't really know what it is. And it clobbers up, and it concerns me that there's orange things or yellow things in the log. What is this thing? So we've given you the ability now to either write it on the log or not. If you're running into any kind of a technical issue, it's always a good idea to apply this. That way the log will actually keep up, and it makes it a little bit easier for you to identify what's happening on the chart. Okay, so the write in the log is a new function for this particular update. Looking down a little further, we now see we have one of the largest updates that we've done in a really long time. This particular update is using economic event management. So econs, we all know what econs are in the trading world. When we're looking at the econ function, if you're going to use this, first you have to check it. So make sure you check the box if you're going to use it. Once you check the box, you now can identify or tell the strategy, what do you want to do? We can see that our first one here is open trade early and exit time. All right, so this means if the model is in a position, if Optimus is in a live trade, live sim, live, whatever, if Optimus is in a trade, then we're telling it how many minutes before the major econ comes out do you want to shut down that live trade, or do you want to shut it down at all? You don't have to. Okay, you can set it to 0 and it won't do anything. If you set it to, in this case, we're on a 3-minute chart. So I would probably check this box and set this to a 3 or even a 1. So I could go all the way down to 1 minute right before the econ comes out. And basically that will close an open position right before the econ occurs. Okay, that's what it's designed to do. It should close that open position. Therefore, your open position is not gonna take the whippiness that is anticipated in the econ. We have then, the one below it is pre-event suspension time. This means the number that we put in here would be, I would put in a 3 or a 4 or a 5. And this tells us how many minutes before a major econ comes out are we going to enter a trade. So if an econ is due out at 8:30 per se, or if an econ is out, oftentimes they come out at 8:30 in the morning. This morning they didn't. But if there was a signal that got me into a position at 8:15 or at 8:25, but there's an econ at 8:30, if that occurs, it's going to say, nah, we're going to skip it. Okay, so that's what that parameter is doing. It is telling us that we are going to skip if this is within so many minutes. Now, some of you are going to use this and some of you aren't, and this probably is going to give you some insight for some of you as to how much econs have affected your trades over the historical. Let's look at the last one, then I'm going to tell you a little more about this one. The post-events trade suspension time simply says after an econ has occurred, how many minutes do you want to wait before we're going to start trading again? Okay, so the top one is when are we going to close any open positions? The two bottom ones are how long before the econ do we stop trading? How long after the econ before we can start trading again? Again, these numbers are variables and they will depend a great deal on the time frames that you're using, the individual markets that you're applying it to. So you can use this in a variety of ways. And some of you are going to say, you know what, I don't care about econs. Just let it roll. I'll take whatever I got. And that's perfectly fine too. Now, the question's going to come up, and it has already. What is this actually looking at? So glad you asked. It is actually looking at a little company called forexfactory.com. So what we've done is we have built a database. If I pull it over here, for those of you who are interested, forexfactory.com is this is where the information is being originated. So we're not using it on the Forex side specifically, but what it's doing, it is looking at this particular information on a day-by-day basis. And we have now, as hard as I hate to say it, we have manually accumulated about 5 years worth of econs now in the database. So when you utilize this feature, sometimes it may take an extra second or two, maybe an extra 5 or 10 seconds to load a chart, because it is now referencing a 5-year manually cataloged database. Therefore, you can use it on your historical testing. Again, we're going back to about 20, actually, I think 6 years. I think we have 2018 in there up to current. Now, what we've done with this is we have created, in the process of doing all this stuff, it now looks at, let me see if I can find one coming up. It is currently set to look at any US econ. Okay, now we can change this to other markets as we go if we need to, but currently it is looking for anything that is affecting the US markets. Those tend to be the larger movers, and those are the overwhelming majority of you who are currently using the program are trading something that US things affect. This means that if it says USD here, and if the flag is orange or red, if it is orange or red, high impact or medium impact, then that will be referenced and called out, and whatever you have your settings turned to in Optimus is going to react accordingly. So we can see that tomorrow things for the US tomorrow. Unemployment claims will be out tomorrow morning. So if you had this turned on at 8:30 tomorrow morning, it would skip a trade. Or if it's in a trade already, it would get out a little early, or it would wait to enter a trade until so many minutes, however many minutes you have it set after 8:30 a.m. The same thing would occur for flash manufacturing and the services that are both going to come out at 9:45 tomorrow morning. So these are times where it will skip. Now, when that occurs, it will show you in your executions on the chart that there was an econ and a skip. Okay, if you have a signal on the chart, it will tell you econ exit for blah, blah, blah. Okay, so it is going to identify itself on the chart. This thing has taken forever to finally get it working right, but it is working. So that's what your new econ event management section is doing. Again, it is back testable and it does work future on the charts. This is the exact same thing that Omnia has in it. So we've applied the same methodology to the Omnia program, and we'll look at that in just a few minutes. The next new thing that we have in the dot-to-dot version is your daily equity stops. Now, some of you are used to using this over on the Omnia side. It did take a while for us to get these things put into the dot-to-dot, but they are here. And now we see in our daily equity stops, you have the choice to use it or to not. If you have it selected, then it now will have a trailing, not a trailing drawdown. I guess it's like a trailing drawdown. It will now say, basically, if the target is $300 for a daily trailing stop. If we hit $300, then it engages. And on this one, I've got it on micro, so that's probably a good number. If it hits $300, it's going to engage and it's not going to allow me to lose more than $150 in that day. So this is not a daily ultimate target. That's further down. This is a daily trailing stop target. Now, you can put in whatever number. You can make these numbers match. This is going to be a very large variety of things that can be done with this parameter. And many of you have been using this on the Omnia side. So again, it is now in the dot-to-dot version as well. There's also a time stop. Now, the time stop variation or the time stop version says that if we hit X number of dollars, whatever this number is, and if we hit this number by whatever time we associate to it, let's say we put in $300, and if we hit this number by 09:45, if we were to do that, then it would simply cease trading. Again, this is not a daily target. This is a daily target by time of day. So it is a little different than your daily ultimate target. If this is set to $300 and it's 9:55 in the morning and you've not hit that goal, then this does nothing. Okay, it won't do anything the remainder of the day. It only takes it out if this monetary number was attained by this time of day. Now, there will be times that it works, there will be times that it doesn't, there will be times that you don't see it do anything, because again, this tracks along with the individual trades and what time they actually execute. Okay, this is entry times. Now, the way to establish, or one way to establish this particular number would be to look at your individual outputs from your NinjaTrader control panel. So once you're in your control panel, if you go through and run your strategy, when you look at your strategy and you look at the orders tab in your strategy, then you're able to see the times that most of your trades close out. And you're able to see the maximum favorable excursion of many of these trades. So if your maximum favorable excursion is $400 or whatever the number might be, and if that usually occurs early, then this parameter would come into play. The goal here, and this goal was put in place when we first started observing that many days, some of the Omnia charts, when we first put it in, many days we would be up considerable money in the mornings, and as it continued to trade throughout the day, it wouldn't hit its daily goal, but it would hit it would actually take a large drawdown. So we didn't lock in nearly as much profit as what we had anticipated or what was available to us. So that's the reason that these two parameters exist. Okay, these are designed to help you lock in profit as the day goes on. The second one, again, if you look at your strategy, and if your strategy typically would make $300 in a day and it does it by 12 o'clock, well, if you've got that number attained by 9:45 or by 9 o'clock in the morning, why risk the additional 2 hours of trading? Okay, so again, it allows you to turn that off. That's what your daily equity stops are doing for us. Looking down one more parameter before we start getting into some of the other stuff, we see that our next new parameter for dot-to-dot version are the volatility filters. Now, this one is going to be a major one, so everybody needs to pay very close attention. If you have developed any strategy templates that came out before this update, then this number, you must pay attention to it. Now, we've set it by preset at a very low number. We set it to a minimum ATR, and that way it shouldn't affect a lot of you, but for some of you, it will. Okay, and for actually many of you, probably will. This particular number, and what we're doing with this is identifying when the market is too volatile for a particular trading methodology to work well without stressing an account. That's what it's made for. When we're looking at this volatility reference, the ATR is literally using the average true range on the market, and it gives us a range that this thing can operate inside of and still run. So we've set the maximum to 25, the minimum to 1. Now let's look at what that looks like on the chart itself. If we're using this parameter, when we apply it to our chart, I've loaded an ATR onto my chart here at the bottom. This ATR, if I double click, it'll open the parameters for it, is set to 7. The 7 here matches the 7 that is in the strategy. Okay, so when I'm looking at my ATR, the 7 is my filter reference. That's what this number represents. It represents the ATR number that you will see. Once we have that information, I'll come back to my indicator again. When I'm looking at the ATR, I now look down, I have a 7 period, and what I'm doing with this is we're looking at the scale on the right-hand side, and as long as the market volatility, I put a horizontal line on my chart, as long as the volatility is somewhere between here and 25, which is way up here, as long as the volatility is somewhere between those two areas, it will take a trade. Now, that also means that if the volatility drops below the value of 1, it will cease trading. So if you're watching it, if you're one of the guys and you're like me and you like to watch it live and we watch our thing, and you're going to see that there's a time where the volatility drops really low, specifically early morning hours and sometimes in the after hours. If you see the volatility drop way down, it may not take a trade, and you may be looking at your chart saying, hey, why did this thing not take a buy? I'm going to send Ron a nasty gram because it didn't buy right there where it was supposed to buy. This is the very first parameter that you're going to want to look at. So understanding what your strategy is doing, again, is a huge part of identifying when it's supposed to do what it's doing. Now, I've tested this thing 19 ways from Sunday, and it's done very well. So just be aware, this is one of the things that gets me tripped up when I see an execution that I think it should have taken, but it didn't. Okay, and so in the process of my last 3 months of back testing live executions, I would run across things like this, where it would dip below the value of 1, and yet at that time of day, I may have an entry opportunity. So in this particular one, at 1:18 a.m., if my strategy was running then, I would have been concerned because I would not have seen an entry in the direction of the trend. However, When I look down at the volatility scale, which is limiting how this thing is going to work, then I can see that it was indeed below 1. Okay, so this is going to be a major for many of you. And if it is something you don't want to use, simply set the value to 0. Okay, so if you don't want to use this at all, you can come through and set the value to 0 or 0.01, and it will basically turn it off. Now, I have it set at this value because I was using it on one of the S&P charts, which is one of my favorite charts to trade. If you're using this on a NASDAQ chart, a minimum value of 1 is probably still fine. However, if we look at the ATR, remember, this is going to change from market to market. Let's go through and pull up a NQ chart for just a second. This is also going to change from time frame to time frame. We can see that if we have our maximum set on, this is one of George's charts. If our maximum is set to 25, that means there's going to be times of the day where it would not have taken a trade during this window because the volatility of the market was above 25. So if it's above 25, again, it will cease trading because based on the historical testing, that particular time of day was too risky. So just be aware of what it is. Now, when we say down to 1, again, the NASDAQ hardly ever drops below 1, especially down here on a 5-minute chart. It never drops below a point per bar. If you're using the same thing on a 30-second chart, I may even have one here somewhere. There's one. If you're running this on a 30-second chart, again, the ATR value will be different. So on a 30-second chart, if we look back over the course of the last little bit, there would be a place where the strategy would turn itself off. The ATR here, we have it set to 1. And if it were to occur on this bar at the 1225 signal, it would have skipped it because the 1225 bar was below 1. 0.92 is not 1. Does that make sense? Or are there any questions about that particular parameter? I want to go over that one because, again, this one's going to be one that if you're not paying attention and if you don't understand what it's doing, I'm afraid it may trip some of you guys up who have been using your templates for a while. So any older template, this is going to be a thing. Is there any questions about what this is doing? All right, no questions just yet. Excellent. So looking down our strategies, so we know what our volatility stops now are, our volatility filters. The one below there, this one is designed to keep us away from that singular bar that comes out of nowhere that occasionally happens in the market. Ironically, those tend to happen right around our timing signals. And when we see that one crazy bar, which is huge, it's way bigger than every bar around it, this next one is designed to help us to avoid the volatility or help us to avoid the additional risk that comes with that. So the entry bar max filter says that if we're going to use it, it's going to be looking back only 1 or 2 bars. And again, this is an adjustable parameter because there's been a lot of consternation on which one do you use? Do you use the bar of or do you use the bar before? So you can use either way. We're looking at, again, a very narrow window of time. This is designed to be an acute reaction of the market. If the current bar at the entry time is greater than 1.5 or 2 times, let's say 2 times the size of the previous 2 bars. In other words, you have that singular bar that is an outlier. It doesn't look like any of the bars around it. These don't happen all the time every day, but they do happen. And we would end up with a condition like we have here. So if we have it set to, we can see that this would have been a valid long entry. However, The previous bar was way bigger. This bar was a lot bigger than the previous 4 or 5 bars around it, indicating that the bar was likely to have considerably more risk. So if we look back the last 3 or 4 bars, this says, oh, wait a minute, this thing was huge. That was a way bigger bar scale-wise to the previous several. In this case, this would insinuate that the risk, which would be calculated from the close of this candle all the way down here to the white dot, if you're using dot offset, that's a large risk. That risk is considerably bigger than had this candle been closing somewhere down here, or had it been more in line with the existing bars. Now, for those of you who know, this is a pattern 5. It is a very straightforward pattern for those of you who are aware of it. However, Optimus does not trade it as a pattern 5. It would trade it as a pattern 1. It can recognize it as a 5, and I'll go over that in a minute. But if this bar is a really big one, and sometimes you guys, just like me, you see, I've seen some of these bars that go from being a 1.5 or a 2-point bar to a 15-point bar, which now puts my risk way out of whack compared to what it has been. That parameter will just cause it to skip. Okay. If that's the case, that parameter will say, nope, nope, not doing it. We're just going to set aside. So if you're using this one, that's what it's for. And again, it's designed to keep us out of that one crazy bar, which always happens at a timing signal that increases the risk beyond what the averages are historically. Okay, so that's the difference of those two filters. One looks at the last 7 bars, and it wants the value to be in between these two. The second one looks only at the individual bar, or where it says use prior bar or the bar of. Okay, you can use the bar of or the bar right before, and oftentimes it'll keep you out of some of those really crazy trades. Looking down a little bit further, and this is one place I'm going to spend just a couple of minutes. So as we're looking down a little further in our list, we see the trading sessions. Now this one takes a great deal of attention. A lot of people pay this a lot of attention. We've done a bunch of stuff with this over the course of time. And as we have, there have been some things that get overlooked. So let's start with the basics. If you are newer to using Optimus, at least one of these 5 boxes must be checked. If one of these 5 boxes is not checked, it will come on. It will give you the green light on the screen, and it will say, oh yeah, we're on, but it will not function. Okay, it will not function. There are times that I personally have been guilty of turning it on and doing all my presets, and I forget to check the box. So at least one. You do not have to have all 5. The order of them is also not important. So it does not matter if you start and go in chronological order, or if you do like I've done here, where I start at the bottom and I turned it on to trade from midnight till 9:25 p.m. Eastern time. It doesn't make any difference the order that they are applied to. It does make a difference that at least one of these boxes have to be turned on in order for it to work. Okay, so it has to be checked. Now, some of you have sent me charts where you said, I don't understand this entry. It wasn't during my time. And some of you sent me charts that you've sent me a chart template that you have overlaps. This has happened multiple times. Be aware, and it's a very easy thing to do. Okay, again, you can turn these on and off 5 times a day. And oftentimes I will get one that comes in and someone wants me to look at their template, which is fine. And it will look just like you see it here. Now, when it looks like this, when all 5 boxes are checked, remember that with the bottom one now being midnight till 9:25 p.m., it supersedes all the previous checkboxes. Okay, so if you have one that you're using and you're looking for a different period of time, this happens again. A lot of times I'll get I'll get these from you guys. And I'm like, oh, well, that's why it's taking every trade that there is outside of the times, because there is an accidental checkbox, or people don't realize, traders don't realize that you've accidentally used one of your values that crosses over all of the others. Does that make sense? So this happens. This happens more often than what most of us would think. When I received this particular template, that's how it was set up. So this one was set up to utilize every one of these times. And when I got to the bottom, I was like, well, wait a minute, this kind of overrunning everything. So again, you don't have to check them, but if you do, just realize that if you've got one that crosses over, it will supersede all of the other cutoff times in the list. That's a fairly common thing to see. Looking down a little further, by the way, these are military time. There was a period of time where this was time zone specific. And in the last update, this is no longer time zone specific. So this now utilizes universal time. So it looks at UT and it will do the calculations behind the scene to match whatever your platform is. Okay, so whatever the platform that you're running is, this will now match it, and you don't have to worry about so much the back and forth of, well, am I Central Time, am I Eastern Time, am I this time, am I that time? It does now recognize all of those times behind the scenes. Looking down a little further, we have days that it's allowed to trade. Sorry about that. We have days that the thing is allowed to trade. Now, when we're looking here, if you have it on box unchecked, well, it won't enter a trade on this day. You will also notice that there is a Saturday on here. Let me explain this briefly. The reason that there is now a Saturday in the days to trade is because we have found, for what reasons we cannot explain, but over the course of doing testing and over the course of looking at issues and stuff over the last several months, we have found that there are occasionally dates where the market will post a price or post a trade or post a whatever you call it. They will post data on a Saturday. It was actually a carryover from Friday, but the market will, I guess they reconcile it to a Saturday. I do not fully understand how this works. Please don't ask me great amounts of details, because I don't know why. I really don't, because none of us hardly trade markets that trade on Saturday. But in order for us to get around weird stuff, okay, we had weird stuff happen and we couldn't figure out why. We had data that was coming in, we had trade execution data that would come in, and we couldn't reconcile it. We couldn't figure out where was it coming from. So what we did is we created a Saturday parameter so that we had a way to handle the data that was being recorded and sent back by the market, that somehow it would have a Saturday timestamp. And this has occurred about 6 times in a year. So about 6 times in the course of a year, and on some markets it wasn't even that much, there would actually be a date stamp or a time stamp with a Saturday date on it. Don't ask me why, because I really don't know. But the Saturday parameter enabled us a way to fix that particular thing. Then we decided to leave it where we could see it here, for the simple reason that for some of you may want to trade a crypto coin. If you're trading a crypto, well, crypto trades on Saturdays. So this allows you the ability to trade the crypto on the Saturday entries as well. Robbie, can I explain the time zones again? Does it use UTC, or is it using a time zone your PC is set to? Great question. Thank you, sir. It is using UTC, but it is using UTC in the background. You don't set UTC. All of these parameters are set to your computer. They should be set to, if you're trading Central Time, if you're trading a BPS, if you're trading California time, you set these to the time that you're wanting to trade on your computer. And then as you hit apply or save, it converts all of the times based on your computer back to UTC, so that as you share a template with someone else, it then recognizes the time as UTC. When someone else applies that template to their computer, it then converts it back to whatever their computer time is set to. Make sense? It's complicated as crap, but it works. Okay, so, but you do not have to set these to UTC. You set these to whatever your computer time is. The only reason we did this was so that template sharing became less complicated. Again, it's a complex little formula, but it works. So, but that is the way that this is done now. In the first revisions of Optimus, this was not the case. Okay, this was not always the case, but this is the way it works now. Make sense? Excellent. Sweet. Okay. Looking down a little further. So again, does everybody understand the Saturday thing? I know this has caused some consternation amongst some of you, but again, it won't take an entry on a Saturday unless it's a market thing, but we had to have that in there to compensate for some of those weird, and again, it only happened a few times, but a few is a few over the course of a year. So that's the reason there is now a Saturday showing there. Down below, these are some ones that you're already very accustomed to. So down below, we have our daily target and stop. Now, the daily target and stop are not the same as the new parameters, which are using equity stops. Okay, these can be used in conjunction with each other. If you want to allow it just to continue to trade through until you hit a target, period, blink, I hit my target, period, otherwise trading until, great. That's the way it was until this update. With the current update, you can now say, well, I want to cut it off if I get up a certain amount. So again, these two new equity stops, they are designed to be able to allow you to lock in profit as you make it through the course of the day, and the two different ways to go about that. Okay, again, I highly recommend if you're using the first or the second one. The first one's very self-explanatory, but I highly recommend if you're using the second one that you go through, you go to your strategy performance. I'll pull this one over, and I have no clue what this thing is. Really? You're gonna be ornery? Let's get a different one on here. I just need something. There we go. If we look at our strategy performance tab, in the strategy performance tab, we can come down to trades. And if you look at the trades tab, there will be a place where you can see your maximum favorable excursion, maximum adverse excursion, and there's the entry time. Okay. If you set it where it was set to entry time, we see it in chronological order. You're able to fairly easily go through and look on the chart. Some of you may need to export it, which is fine, but you should be able to see the times of the day where or how much your open profit is on a daily basis. And you can look and see, what do you usually hit that by 10 o'clock or 11 o'clock or 12 o'clock? And again, this is where you would get that reference to help you identify, oh, well, you know, if I coalesce all of my early morning times together, how often do I get a bigger up in a trade before it loses money by after lunch? So again, this is where you would be able to gather that information. And you can go through and you can export these into an Excel spreadsheet and be able to sort them. But that is one way. Your back test will do the same thing. It will tell you what you're getting and when, but this is one way to give you a starting point. If you do ever want to export the data from here into an Excel sheet, you just simply right click and export. And when you hit export, it will automatically export all of the data on this tab into an Excel spreadsheet. Okay, but that is where you're able to see the times that your trades are actually closing out or not closing out or whatever. And this will tell you your maximum favorable excursion, your maximum adverse excursions. This is where you would see all of that information if you're wanting to get a deeper dive into your settings. Okay. Looking back onto our chart again, as these things are clunking along. So if we're looking further down, I'm going to go through, we have our daily target and daily stop. Again, these are in addition to the new parameters that are at the top. Looking down a little further, you can have it where it shows you the result of what the day is, and it will plot it in the center of the chart. If it hits a daily target or a daily stop, it will actually show you that on your chart. It will only show you that if you hit a target or a stop. Okay, and you can choose where that message comes out. Let's talk about this next couple of parameters because there's been a lot of confusion over some of these. They've been around for a while, and one thing that I'm learning is that there is some confusion around them. I want to take a few minutes and go through them with you. The trade P45 is probably the largest confusion that we have. Okay, this one has been very misunderstood, and based on some of your emails back to me, it's become even more clear that it's been more misunderstood. When this particular strategy is asking the question, do you want to trade a P4 or a P5? First, let's understand what is a P4 and a P5. A P5 is literally the setup on this chart. It is a higher high market price at a buying time. Does everybody understand that one thing? Because that one thing is going to make a big difference in what you see moving forward. A pattern 5 is where the market has put in a higher high price. Does not mean a higher close. It is a higher high price at the buying time. If that has occurred, there is an expectation that in a lot of instances, we will see the market pull back. Okay. Now, not every time. Every pattern 5 doesn't work. They work a percentage of the time. But this is what a pattern 5 is. We want to identify it, and that's all we're doing with this parameter. This parameter will not trade a pattern 5 as a pattern 5. Much like if we look at the next signal up, a pattern 4 is a lower low price at a selling time. If that occurs, then the expectation is we're probably going to see a pullback up. Now, the way that the indicator identifies pattern 4 or pattern 5 is by using a swing tool. Okay, it uses a swing tool. I'm going to put a mark on the chart here because we're going to look at this for a second because it has been so misunderstood. Bear with me if you know this already. Again, just bear with me because everybody learns it at a different time. Pattern 5 and pattern 4. Now, when these things occur, the dot to dot D2D does not trade counter to the dots on the chart. This is not how it works. It only trades the dot as a buy dot. It only trades the sell dot as a sell dot. It does not trade them in the opposite direction. And it is using the swing indicator as its reference point. So if there is a swing high, and if the price is at or above it at a buy time, then it is classified as a pattern 5. Doesn't mean it's going to trade it as a pattern 5, but it identifies it and says, hey, you know what? We've put this thing in place, and this is likely to be a riskier trade. The exact same thing occurs for pattern 4. It utilizes the swing indicator, and if it touches the swing level or is beyond it at the time of a pattern 4 or at the time of a sell signal, it is identified as a pattern 4. Okay, doesn't mean it's going to trade it as a pattern 4. It means it identifies it as a pattern 4. Now, those two things are important to understand because if you have this parameter selected, if we're looking in our strategies, and if we tell it, do not trade a pattern 4 or 5. In other words, we uncheck the box. The box comes checked by default. If we uncheck the box because, well, that's what our historical backtesting says was better, fine. Life is good. This simply means if the box is unchecked and if the indicator identifies a pattern 5, it will say, skip it. Nope, not going to do it. That's all it does. Okay, it does not trade it backwards. It doesn't trade it reverse. It just simply says, no, I'm not going to mess with that one. And it will show you nothing on the chart. It literally just skips it. Now, this is important for some of you to realize because it will show you places on the chart where it didn't trade. And you may be questioning, well, why was that not a trade? Well, remember, it's got its thing. So that would mean if we had that unchecked, when we came into this 815 buy signal, the price was above the moving average. The price was also above the previous swing high. Now, the swing high hit 3 bars earlier. Does not matter. It may have hit 30 bars earlier. But because we don't have that box checked where we just tell it, leave it alone, it would have ignored this signal completely. If we have it set to trade a pattern 4 or 5, in other words, it says, hey, just letting you know, we've seen it, we know what it is, trade through. We're just going to take every buy signal that there is, then it would take the trade at the buy time because we're allowing it to trade the pattern 4 or 5. Does that make sense to everybody, or is anybody confused? Because this has been a large point of contention on, maybe it's the way I worded it, I don't know, but it's been a very large point of contention with folks sending me trades that are like, why did it not take this trade? And this is a thing. Does everybody understand what this is doing? If you don't, again, please ask. This is not a condemnation thing. I just want to make sure everybody understands what we're doing and what the indicators are doing or what the strategy is doing. Everybody good? All hearts clear? Okay. So I'm going to come back and revisit that one for just a second in just a few minutes. But for now, that's what it is. Okay. Yes, we're going to make a little clip of this whole presentation today and send it out to folks. Okay. And in fact, I'm having to keep some notes along the way for Rachel, so please bear with me. All right. So that being said, and we'll come back. I want to talk about that one again briefly in just a little bit. All right, moving down our list, we're almost done. So again, this has been the largest one that as a point of contention. There's a second parameter that goes with this, and it's called close late 4 or 5. Now, this one has caused some additional confusion, and this simply means that if the first one is checked, there is a condition that allows or says if the first bar or the signal bar of a pattern 4 or 5 is qualified, and if we have this checked, we can say, yeah, trade it because it might work. Okay, it might work. But if the bar after it becomes a pattern 4 or 5, go ahead and close out the trade. Okay, again, a pattern 4 or 5 is a 3-bar window. It's a consecutive 3 consecutive bars. That basically means that, much like the place that I have on my chart here, This says that, hey, if this first candle at the sell time here, if this one did not qualify for the pattern 4, so we got short, but if the one right beside it put in a new low, if this one actually put the new low in, then get me out of the position, close me out, because I probably already got a little profit, and it's a pretty good likelihood that it may pull back up to the dot price, which is basically kind of what it did here. Okay, so it says that, well, the first one that got here was not a pattern 4, therefore it was a valid short. Great. The second one put in a new low. It was the very first candle. It qualified for the pattern 4, a late pattern 4. Close out my position because now it got super risky. That's what the second position does. Okay, so we have the first one, and then we have the second one. Okay, so these two, they go together. They work as a team. You do not have to close the second one. A lot of you have recognized that when you're looking specifically for a ATR value or a fixed tick, that a lot of times, if you get in on the first signal and if it becomes a late pattern 4 or 5, you might still get your 10 or 15 or 20 tick target. Again, this was put in originally with the anticipation that you would hold it the entire duration of the signal. And most of you don't do that, which is perfectly fine. Again, with things we learn along the course of years. So that's what this parameter does. It will close out the position if it identifies it has become a pattern 4 or a pattern 5 on the bar after. Okay, so that's what that actually does. Looking down a little further, a little more straightforward, where we see bar direction agrees. When bar direction agrees, this means that if we have a selling candle, we have to have a selling bar. Now, why is that important? Well, a lot of times the market will do different things based on a selling candle and a selling bar. This gives you a filter, a way to filter some of those things out. This also is the only parameter that we have that gives the ability to get in later. So occasionally someone will ask me, well, I don't want to get in at the signal time. I want to get in as there's a pullback of some kind. I want to get a little pullback action. This is the only parameter that allows anything like that in dot to dot. And this parameter simply says late entry. This means that if I have it set to bar direction agrees, I can select late entry, which now will tell the tool I can't get in on the sell, or I could get in on sell. So this makes it valid. If I had the tool set the other way, it says, I'm going to get in here. The doji counts as the same color as a dot or as a previous color. So I can't get in here, but I can get in here because now they match. I picked a doji, a horrible example. It also, so again, it says that you can get in later. If you have this parameter selected, you have to wait. So in this particular case, if we were looking at this entry at 215, it is a buying candle opposite of the selling dot. Okay, opposite. So buying bar, selling dot, they're opposite. Therefore, if that parameter is selected, it will say, I can't do anything with this. But I can once it confirms. So once the sell happens here, now this becomes a valid short because they are matching. So this is the only parameter that allows us to get in or allows an entry after the fact. Okay, so that's what those two parameters do. You can choose to enter bar direction opposite, which means it's a buying candle and a selling bar, or bar direction the same, which is a buying candle, buying bar. And in either case, you do get the opportunity for a late entry. Looking down a little further, we have the trend identifier. Now, trend identifier is also one that has caused a little bit of confusion. This is not the moving average. Okay, when we have trend identifier agrees, this is not the moving average. The moving average, if it's on the chart, it's working, period. If it's not on the chart, it's not working. That's how you know if the moving average is being used, because if it's you see it, it's working. That's how this one works. The trend identifier is the internal trend identifier inside of Aurora. So when we're looking in Aurora, we can see that there is a trend identifier. Lo and behold, scroll down just a little bit. If you want to use the trend identifier, you need to turn it on. That means you have to check the box. When you check the box, it now will apply the lines to the chart, and after it applies the lines to the chart, Optimus will look at the direction. It is not above and below, it is the direction. So there's a starting time that's a sell. I'm going to put it on the chart here just so that we can see. So there's a starting time that's a sell or a buy, and if it is applied to the chart, once my Jeopardy music goes off, da, 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 we can see now this, it is not a matter of whether or not the price is above or below that red line. It is a matter of whether or not that red line exists on the chart. Okay, just like here, we can see on the most recent action, the green line exists on the chart. As long as that line is green, you can see that there was price action closing above it, price action closing below it. But as long as that green line exists on the chart, it is buy. That's how it works. Okay, it is looking, this is an internal Aurora trend tool. If we have this turned on, we can have this turned on in conjunction with the moving average or on its own. And if that tool is selected, and if we have it turned on in a trend identifier, Optimus would only take long entries. So it would take everything long through this entire time frame, and it would ignore every short. That makes sense? So again, it would only look for longs and then whatever targets and stops, and it would only look for longs through this entire run until it became red again way over here. So once it became sell, then it's only going to take shorts as long as that trend identifier is kicked in. Okay, again, this is not the moving average. Now, I'm going to get a minute of to why I'm going through all this stuff, but it's important for us to get a reminder for those who have been here for a long time. Sometimes we forget things. The next one down is wait for direction close. This one says that if we have this box checked, we are now not going to take an entry until, is this in this particular case, if I came through and let me turn the trend identifier back off so it's not confusing. There we go. If we have require bar close turned on, if this parameter is selected, then it will skip a lot of trades. It will skip some trades anyway, because wait for direction close down here, wait for direction close says, let's uncheck these so we're not confusing them. If we're waiting for direction close, now we have to tell it, well, how long do you want to wait? So Mike, if we're going to wait for a direction close, how many bars are we going to give it to see if it's actually going to close? This is designed to be a confirmation of entry at the time tool. Basically, this thing says that we're going to wait up to 3 bars as default. You can make this any number that you want. But if this is selected, then it would simply tell me that on my chart here, at my 415 signal, the price itself closed below the moving average. Therefore, it would be a valid short entry. Yeehaw! However, it will not enter short until a bar, in this case, it was the next one, a bar confirmed the direction of the close. So instead of it entering at the close of this candle, which was the open of the second candle, it would have entered at this candle there because this candle closed in the expected direction. Now, how do we know? It's very important to understand. How do we know it closed in that direction? It uses the open price line. So all of you in this room should know what an open price line is. If you don't, we got issues. But I'm going to tell you, the open price line is the close price of the bar at the signal time. It is not the dot price. It is the bar close. So this line, which is on every single signal that's ever projected, goes out to the upcoming buy time. That line in the sand, the line in price, in order for the strategy to take a short, it must close below that line. Now, with the setting that we have it on, it also must close below that line inside of wherever I'm at down here, 3 bars. If it does not close below that line inside of the first 3 bars, then it will just simply skip the remainder of the trade and it will wait for the upcoming signal. Okay, so that's what this parameter does. It requires a direction. It requires the bar to close in the preferred direction. That's what it does. The next one down is no entry in the chop zone. All right, well, no entry in chop zone. What is a chop zone? A chop zone is a limiter. Chop zone, if you go back into your indicator again, remember this reads the indicators as they're printed on the chart. Does not read them behind the scenes. This one reads the indicators. If we go back into our Aurora, you will see there is a place. Lo and behold, it's called chop zone. Pattern 3, chop zone. If you have chop zone turned on by checking the box, then, and you don't have to see it, you can change the colors and you can change the presentation of it, which is fine. If you have it turned on, then Optimus will be looking at this number right here. This is the only number it cares about. It will be looking at this number and it will say, hey, he's got it set to 15 as a number. Whatever you want this number to be, you can test the individual numbers. If you've got it set to whatever it is, then that means there have to be 15 bars in between signals for me to take a trade. If you have it set to 4 or 5, which is a common setting, that means from the close of this bar here, there had to be at least 5 bars before the upcoming signal time. 1, and stay in draw mode here. 1, 2, 3. This one would be a valid short. This one would not have been a valid long if it is set to 5 bars. This one would not have been a valid short because there's not enough time. Again, if you have chop zone turned on, it's going to present on the chart, and it's designed to keep you out of some of these back and forth swingy moves, and it will literally just count the number of bars. So if this had been a valid buy, if the bar had closed in the right direction, if the bar had closed above the moving average, all that stuff was great. This should be a long entry, but because we have that turned on, it will skip it because there's not enough time, enough bars before the upcoming signal for it to take the trade. Okay, it's designed to keep us out of these areas where sometimes we see the market goes back and forth, back and forth, back and forth with our time signals. So if the time signals are too close together, it will say, nah, we're just going to leave them alone. And again, these are things that you can test. That's what the chop zone represents. Okay, and again, for it to work, it must be turned on. That's the key, has to be turned on for it to work. Looking down a little bit further, that's the key parameters or the trade filters for actual entries on that side. If you're using your PVT tool, all of you have the PVT tool, came with your Optimus. And if you're using your PVT tool, you can use PVT to filter out your entries and get reversals. This is the only other way that I can think of off the top of my head that there could be a late entry inside of the standard dot configuration. Now we're going to look for a second at the crossover trade, and that is a different one, but that is a different, completely different entry. Here, if you're using the standard dot configuration, we have PVT. If you have it set to filter entries, this simply means that the PVT had to have already been pointing in the up direction. PVT would have had to have already been long before we would be able to go long here. And we would have to be closing above the moving average, and depending on whatever else we have it set. So PVT would have had to have been already printed long before this long was valid. That's how that works. If you're using the other two parameters say, and let me turn on PVT on our chart here for a second so that we can visually see it. We're going to go to PVT, does not utilize the panel at all. Okay, so actually a great example. So if we are looking at our PVT for our entry filters, we would see that this would not have been a valid entry. Now, it would have been a bar later. So PVT would say, at the close of the buy candle here, at the close of the bar, PVT was short. It was negative. And it is not an individual thing. We all know, well, I say we all know, we don't all know, but PVT goes from signal to signal. That's how it works. It's like this one, there's only, well, 2 bars in between it, but it happened to be the 2 bars in between was at a buy time. Well, that means it disabled the buying opportunity because it was in a PVT short had we had it turned on. Now you can have this on the chart and not used. This is not like the moving average. This can be on the chart and not be used. You have to have it checked to be using it. Okay. We also have exit on reversal. If exit on reversal is checked, it simply means that if we were in a buy position, if this had been a valid buy position right here, yay, and we have enter at reversal checked, when it got the first sell, it would have gotten out right here. So this would have given us the opportunity to get in long here and get out here before the pullback happened. That's what it's designed to do. Sometimes that will work great, sometimes not so much. Sometimes you'll wish you had more, sometimes you'll wish you had less. Again, this is what it does. So it gives you the ability to look at that particular global exit point. And then we have enter on reversal. If checked, and you can use all of these, if checked, it will now say enter on reversal. That means if it's a buy, then it would enter at the first buy PVT signal. So instead of it entering at the close of the candle here, just above the moving average, this is on the moving average. So instead of it entering here, when the very next signal closed, it would now be entering here, because it enters on the reversal that is in agreement with the time signal. Time comes first. So we have the time signal on our chart. We would have been looking for a long opportunity, but we were in a negative PVT. It's going to ignore everything that we're doing until PVT now says, hey, yeah, let's do this. Once this PVT signal trips over, now it will place an entry at the close of this candle, and then everything else goes according to that entry price. Okay, so PVT has 3 separate functions that you can do, but you must have them on the chart before the Optimus dot-to-dot strategy will use it. Okay, has to be on the chart. Looking down a little further, we have what I probably should maybe someday take out. I don't even know if anybody uses this, but they might. This was my very first attempt to limit pullbacks or risk reduction. So this is my first attempt at risk reduction. We got a little more sophisticated as we went. The first attempt at it was simply something that says, hey, instead of entering after or waiting for the bar to close to get an entry, it said that once I have an entry, such as in this little buy signal, it says once I got the entry, I want to see the market close in my direction. So the entry would have been long here. Inside of the first bar, if this first two bars don't close, or at least one of them doesn't close above the open price line, instead of leaving my risk down here, it says just get out. That was my first effort. Okay. So based on observations and based on feedback from some of you guys, we improved that considerably. But our first effort was just to say, hey, we went and it worked fine, and we closed at least one of the first two bars above it. We're going to let it go, and our risk would maintain whatever it is. That's what that parameter does. If it did not close one of the first two candles in the expected direction, such as we would have had here at the sell, so with the sell coming out, it did not close the doji below. The second bar after, it did not close below. It would have exited the position here. Instead of the risk being exited all the way at the top, it would have got out sooner. Okay, again, the whole idea there was to limit the exposure for a signal that's obviously not working. Because we are dealing with time, the trades typically should go in the expected direction quickly. So that was the first effort at reducing risk as we went. That's what that parameter does. Again, I'm not sure anybody uses it anymore with the second one that's in place, but some of you might still. So I have not removed it, but I want you to understand what it is. You can tell it how many bars do you want to wait. Some markets like the S&P, I can tell you ahead of time, if you go more than 2 bars, well, if you go more than 2 bars, it's probably not going to work. On markets like the NASDAQ, you may have to go 4 or 5. So sometimes the NASDAQ is a little different, but that's what, wait a minute, wrong one. Down here at no open price line close exit. That's what this means. The no OPL, open price line close exit. So if it's checked, it will just get you out, and it should limit your risk in the individual trades. Most of the rest of the stuff here, I'm not going to spend a great deal of time on because you guys already know most of these things. You have your entry size, you have your, now, one of the new things that we put in here by popular request was the ability to only go long or only go short. So several of you asked me for this. This was not something I ever anticipated in the beginning, but we went ahead and put it in. So now you can choose to only take longs or only take shorts. This would be extremely handy for those of you like myself who you watch a daily chart or an hourly chart. And if you have an hourly sell signal and the market is starting to make the move, you could turn on your live strategy so that it only takes shorts for the next 5 hours. And you could manage it a little closer that way. So again, this gives you the ability to look at a higher time frame chart and identify, you have to manually identify. It's not going to do it automatically, but you can manually identify this and say, you know what, just take everything short that you can do because this market's getting ready to drop. We have a daily pattern 5. Let's do this thing. And that's what it will do. So then for the next day or two, you may only take shorts or only take longs. You have the option now to do this. Okay, this is new for this revision. Target types, these have not changed. You can choose fixed targets, ATR targets, dot targets. If you do choose a fixed value, this is something that came up recently. If you do choose a fixed value target, but you still want it to exit when the next signal comes up, but you're looking for 10 ticks or 20 ticks, make sure you check the box. Okay, if you have this set to fixed, and let's say you have it set to 100 ticks, if you do not have this box checked, it will ignore every other signal that's coming until it either hits the original stop or the 100 tick target. Okay, so somebody sent me a template not long ago and they said it didn't get out when it was supposed to, but they didn't have this one thing checked. Now I say that because it's going to come back and it's going to be important later. So that's what that box does. So you can look for a fixed number of ticks, and this is generally for a scalping kind of setup, which is fine, but that's what it does. Make sure you understand what each of these things are doing. The stop type, ATR, fixed volatility, same thing we've had for a long time. Not really anything major changed at all there. Ticks break even. This was one of the later things that we put in. So you now have the ability to choose, what kind of break even type. If you're using ATR for your target, you can use an ATR based trail stop and a break even, but you have to be using an average true range here. It does not work if you're using dot to dot. Okay, you must have a fixed or an ATR target in order for these to work under ATR. Ticks will work no matter what. So if you just want 5 ticks, if you get up 5 ticks, lock it in, fine. But again, you gotta have a way to get there. Trail stop type, you can still choose your fixed or your last bar offset. Fixed trail stops, and again, pretty much like its name sounds, last bar offset is it stays right below or right above the previous candle until a target is attained. So that's what that does. Looking down a little further, there is a new parameter here. Oh, let me go over this one real quick. The risk reduction mode. This was the second attempt at the one way up here at the top for no open close exit. So this one turned out to be a lot more effective for those of you who are questioning using it. What this one did is instead of just getting out, because there were a lot of conditions where we would see the market would not close in the expected direction in the first 1 or 2 bars, but it would finally get there. It just took it longer to get started. Sometimes that happens. What this particular parameter does is it would take something like, let me find an example of it here. If it exists, okay. So what risk reduction mode would end up doing is it would take something like the buy signal that we have on the chart in the center. Risk reduction mode would say, okay, we had a valid long. We got into the market long here. Open price line is pre-established for us. This line is going to be a reference point on all signals. We can see that, well, this one actually did manage to close just above. So that's a horrible example that I was getting ready to look like a fool on. Well, show me something here that I don't see a good example of one just yet. Of course, I don't see one that I'm looking for it. All right, there's one. So when we're using the risk reduction mode, the signal to the right-hand side of our chart would simply say, actually 1, 2, that one not either. Dang it, I'm gonna look like an idiot here, which is not hard for me to do sometimes. There we go. All right, 1230. On this 1230 sell signal, the market is below the moving average. We can see that our open price line is the close of this candle. It doesn't have much time in it. However, the very first bar here does not close in the expected direction. Because of that, our risk, which would normally be here, is now going to stay put. If we have it set to 2, which is often where I use it personally, then when this candle did not close below the open price line. Remember, the open price line is down here. It's a selling candle, but it did not close in the expected direction, did not close below the OPL. When that didn't happen, instead of just exiting the position, which we could, it now says, you know what, I'm going to give it a little bit, but I'm going to reduce all of my risk. I'm not going to leave this thing sitting up here. I'm now going to bring my risk down. I'm going to put my risk 2 ticks above the candle, the worst price that went against me, whatever that price was, whichever one was the worst. it's going to look at this bar and it's going to look at this bar. And it's going to say, okay, take the height of the candle and 2 ticks above it, which was probably like right there. So 2 ticks above the height of that bar. And that's where I'm going to leave my risk instead of leaving it all the way here at the top. I'm reducing it to almost nothing or as little as possible. It might still drop and go, but it ain't looking good. So therefore, I'm going to leave it alone. Okay, so that's what it does. When the stop's taken out, the stop's taken out. In this particular case, it would have gotten out it was still gotten out with a losing position. However, it was nowhere near the loss of taking a full hit on the stop. The reversal would have got it first. That's what risk reduction mode does. Okay, it allows us the opportunity to say, if we see this sell signal that was below the moving average, same kind of thing. The open price line for the sell signal is the reference point moving forward. So off of this open price line, we can see that candle number 1 after the signal did not close below it. Candle number 2 did not close below it. Therefore, instead of our risk being all the way up here, we're now going to pull our risk down to 2 ticks above that candle. So we've reduced almost half of it, and we didn't give it a whole lot more time, but it would have eventually taken us out on that risk. So again, we would rather be taken out with a small loss here versus a larger loss up here at the top. That's what risk reduction mode does. Any questions about what those 2 things are doing before we get down to the next entries? You guys are not full of questions today, which I guess is good. So we will be breaking this down and sending it out to anybody who needs it or wants to review. Looking down a little further, we did add in here we added the ability to do break even and trail stop on price change. So that is also a new function for here. If this is not selected, okay, if this is not selected, and if you're using break even and or a trail stop, it will now work like the last update to Omnia did. So if we're using a trail stop, once the market has attained the trigger value, if it is not checked, then once the trigger value has been attained, it will put the trail stop behind the candle that was triggered, but it will wait until the close of the candle. Okay, if the trigger value in this particular case is 6 ticks, this was put in because of these trail stops got kind of tight. If the trail stop, that's 3.5 points, let's just say it was at 3 points. Well, if it hit 3 points during this candle, then the trail stop would not have moved until the candle closed. And once the candle closed, the trail stop will now be just below the low of the candle, or whatever the offset distance is. But the key is it would not move it until the candle closes. It allows the price time to go up and down, up and down, up and down inside the candle, and then set it when the candle is over. If you have it set to on price change, such as here, if we have this set to on price change, break even and trail stop on price change, then it is not as accurate back testing. Okay, we've never been able to perfect this on a back testing level that was really good. We get pretty close, but because of the way the ticks come in, it's not been a thing we've been able to accomplish, and nor has anybody else. So we haven't been able to accomplish where we have a super accurate back test if that is not checked. But when it comes to a live trade, as soon as that 3-point number was attained here, it would have then moved your trail stop to whatever the distance was, and you may have been taken out inside of the bar because the price action itself whipping up and down, it would have taken you out. If you have it unchecked, it will move it only after the candle has closed. Therefore, you're still using a trail stop, but you may be staying in a position longer. Okay, that was one of the things that you guys all asked for, was the ability to do that, and so that's what we did. So that now is a part of dot to dot. That is also a new function that is in the dot to dot. But again, understand how it works and what it's doing. Because if you have the box checked, historically, it will not be as accurate. We are still trying to figure out a way to get around some of NinjaTrader's market stuff, and we've gotten closer, but it's still not great. On real time, it will move it very quickly. If you have the box unchecked, it will be more accurate historically if you leave it that way real time. Okay, so calculating on a bar close is much easier than on a price change. That is what that particular parameter does. You crossover trade. On the crossover trade side, this is simply where the moving average, you can look at your Aurora for more about this, but if the price itself is below the moving average and it's in a buying zone and price crosses above the moving average, then it will enter a position. Much like, I don't even have one close by, that one kind of is. So in this particular case, if we were looking at this 1151 signal, we can see that at 1151, the price itself is actually above the moving average. Therefore, it would not have counted if we had it turned on. As soon as the price closed below the moving average here, it would have entered a short position. When this occurs, it is now using the candle body itself. It is using the entry candle as its risk. So the entry is now, and the risk is calculated from the height of this candle. Okay, so if you have it set to 10 ticks, it's going to be 10 ticks from the top of this candle. That's how that is calculated when you're using that entry. Okay, it is a completely separate entry, and it does require a moving average to be on the chart to work. If you have it turned on and you don't have a moving average, well, it's not going to work. It might even throw an error that says something about object not set to a reference. That's possible because you're trying to reference a moving average that's not there. Okay, so if you have crossover trade turned on, you don't have to use it. It comes minimized, but if you do use it, again, you do have to have a moving average on the chart for it to work. Targets and stops, pretty straightforward. It also gives you the ability to choose how many bars before the upcoming signal, because the last thing you want to do is get short one bar before the buy time. I say that's the last thing, maybe that is what you want to do, but it gives you the ability to say, if it hadn't crossed over in the first couple of bars, or if we're running out of time before our upcoming signal, just skip it. So that's what this parameter does for us. Stop ticks, again, stop ticks are calculated from the height of the bar. Down to our last little section here, and I'm sorry it's taking so long, but I want to get all this done for you guys. Everybody can refer to it. Opposite signal breakout. We all know this as the puncture trade. I put in fancier words in here, but this is called the puncture trade. This is simply where when you have an average on the chart, or when you can actually use this even without a moving average on the chart. But when you have the puncture trade turned on, it will simply look for a open position, or it will look for a position that is not entered. And as the market goes through a buy dot or a sell dot, it will then take the opposite side. Do I even have an example of that? I do, sort of. Here, we can see that at 10:21 this morning, we had a sell dot. This would have been an opposite signal breakout. This is where it was still inside of a selling zone. That's the time from the sell signal to the buy signal. And as the market penetrated that dot, it would have taken a long entry at the dot price, and therefore it would have been looking for a puncture or a continuation higher. If we had it set, if we had our number set to at least 1 or 2, it would skip the trade. We look down here where it says bars to next signal. If we have our, well, that's not the right one, under opposite signal breakout. If our bars to next signal, wherever it is down here, is set to at least 1 or 2, then it would skip it because there was not enough time in between that before the upcoming buy. So it would have just left it alone. Okay, so that's what that does for us. This can also use a PVT filter. Now, the important thing to remember when it comes to the opposite signal breakout, the crossover trade, these also still use the newest parameters all the way up here at the top for your volatility filters. So your volatility filters, now they are controlling all other entries. Okay, they're controlling all of the other entries on your chart. That's kind of why they're at the top. So if the market has been weird and if it got sideways and if the current ATR got down below 1, then it's just not going to trade. There's just not enough volatility for it to do its thing. If you're on a, again, if you're on a second-based NQ chart, it may or may not, you're gonna have to adjust that parameter if you're gonna limit it. There are times I actually have been watching this for a while and I had to adjust that parameter for some of these really crazy high volatility days. If you get a really high volatility day, well, it's just not going to trade. It doesn't mean it's broken. It means that the volatility is too great, and it won't tell you that on the chart. Okay, so it's not going to give you a signal that says too high volatility. It will tell you that in your for a brief moment in the light in the top corner. So your top corner, if the volatility is too high, only for the one bar that it is on, it will turn yellow for just that bar, and then it will reset again because it resets on every single bar. Okay, so that is a thing you want to keep an eye on. Any questions about any of those things? There's a lot of stuff and there's a lot of new stuff in there. Do we have any questions about that before I move to the next little piece here? We're going to talk about that in a second. Where is, don't I have, there we go. When you're using Omnia, okay, Omnia working very similar, not quite as many doodads. If you're using your Omnia setup, you will see that now in the Omnia, there is still the 5 separate times of day. We covered those just a little while ago. You have your days of the week to trade. We covered that a little while ago. These are the same. We've tried to make a lot of the parameters the same from the individual strategies just for simplicity's sake. And now we do have in your Omnia, there's your daily targets and stops, and there's your econ setting. Okay, so when you're in the Omnia now, if you're going to have this box checked, again, now it's going to be using the econ stuff to filter its trades in and out. Omnia does work considerably different. So make sure that you understand how that is working. Omnia also has your volatility filters. None of these things have changed. And since the last major update, we have had several fixes since the last update. I'm going to go over some of those in a minute, but otherwise, all the parameters are pretty much the same. Again, Omnia, for those of you who are newer to Omnia, Omnia does not use dots on the chart. So just as a very quick refresher, the Omnia program looks only at the time of day a signal occurred, and then it looks at, did that signal or did the very first bar after that signal close above or below? So in this particular chart, this is a customer template, and he has his chart set a little differently than I generally set mine. But let's turn off the axis labels here so that we can see, turn that off and turn this off so we can see the doohickeys. Doohickeys is a very technical trading term for those of you who are not aware. So the gray vertical line represents the upcoming time. It could be a buy, it could be a sell. Omnia doesn't care. The only thing that Omnia cares about is which direction that the very first bar after the signal closed. That's how Omnia works. So we can see like we had 2 signals very close together coming back here at 12 o'clock on this 4-minute NASDAQ, mini NASDAQ chart. The very first signal after the gray line was a sell. It was a down closed candle. Therefore, Omnia identified it as a sell. That's as simple as it gets. So identified as a sell, and it will remain a sell until the end. Omnia does have the ability to do what's called a reverse. This is inside of the parameters, and this is where the first bar closed in the expected direction, such as here, or not expected direction, it closed down. So when the first candle closed down, but the very next bar was a fully engulfing candle. That's how it works. The very next bar was a fully engulfing candle. Omnia can trigger a reverse, indicating that, hey, they started, but they're not going to do it. When it indicates the reverse, it can then take an entry based on that. Okay, so that's how Omnia itself as an indicator works. When we're using the Omnia strategy will read the Omnia signals on the chart. And again, you can use it with a moving average, but you need to turn on the moving average on the chart, and then you can reference it inside of the Omnia strategy itself. You can require several other things to happen, but basically they're the same filters or the same parameters as dot to dot, all of the trade management and that kind of stuff. Now, there are a couple of things that we have done. So, well, before I go any further, any questions? Omnia is super simple. Some of you guys use it a lot. Some of you guys don't use it at all. It is an available thing. It does have the one update. Any questions about Omnia before I get into some of the other things that we have done at all? And before I take a drink. Okay. I'll start off on Omnia. So on Omnia, we have had some issues, and these are some of the bug fixes that we have done and the strategies. I want to go over a couple of those real quickly. Some of the bug fixes that we've done, we were having an issue with stop and reverses. So in Omnia, the original principle that was taught at the Edge course 2 years ago, or a year ago, or God, whenever we taught it, I don't remember. But we taught it in the Edge course, was if the market hit the other side of this gray box, then that became your exit and potentially a stop and reversal point. We were having some issues with changing over from one position to the other. So actually doing the stop and reverse when we got to there was a challenge, and we have finally got that fixed. We also have fixed the reversal pattern. So when you have reversal turned on your chart, and when you have given that bar, it would go from short and it would do a market order reversal here. Okay, so it does a market order reversal, and trying to get some of that stuff to match up real time versus historical has been a real challenge, but I think we have finally gotten it with this update. So the historical stuff looks really good. I've been going over it now for the last month. I'm pretty sure I probably missed something, but after about 200 hours, your eyes run together, and yeah, and it looks the best I've ever seen it. So, and real-time executions have been spot on. So the updates that we finally got these working a lot cleaner are doing very, very well. So no issues there to report. I think I gave a short list of some of the bug fixes when I sent out the email the other day. So I'm not going to go over every one of those. I do want to go over a couple of things that we have discovered and we have figured out. So in the course of learning about this, and then I'm going to briefly go through the Guardian with you guys. So when we're looking at dot to dot, when we're looking at, that's fine. When we're looking at dot to dot, when we're looking at any of these strategies, there's a couple of key things that I've realized may or may not be getting done as a best practices rule. Okay. Some of the things you're going to want to consider for best practices, and I'm going to put a little short list here on my chart, and that way you'll have it to refer back to. So best practices when back testing. That is terrible. Jeez Louise, this kid needs to learn how to type. Best practices for back testing. Practice, Practi. I guess that's practices. We'll go with that for now. Doesn't look right, but maybe I can't spell. It's that day. So best practices. The first one is make sure you have clean data. Now, there's a thing that will happen in NinjaTrader, and it's frustrating. I wished I knew a way around it, but I don't. So make sure you have clean data. This means if you have run 25 or 30 or 40 consecutive back tests, okay? If you run that many back tests, you want to go through and you want to look at your manager, your task manager. Now, to get to your task manager, you're going to right click on your chart down at the bottom corner, and you're going to want to look at your task manager. You're going to find NinjaTrader in your task manager. Okay. You can see in this particular one, I'm running 24 charts. So I have 24 NinjaTrader applications running at this moment. With this number, when you start running lots of back tests, does everybody see this 51% and this memory number? When you've run 20 or 30 back tests, this number is going to climb. When this number gets above 3,000 to 3,500, if it goes above 4,000, it is time to stop. And it is time at that point to stop and to reset your platform. Save your templates, save your work, and then shut the platform down and turn it back on again, and then start up again. So when this number, again, if this number exceeds 3,000, you can get by with it, but it goes over 4,000 for sure, stop. The reason that I say this, not only will you see a marked decrease in the performance on your charts while you're doing your back test, it'll take longer and longer and longer and longer and longer to load one. But when you see this number get that high, NinjaTrader holds that data. They don't let it go. We refer to, some programmers refer to this as a data dump. So they don't let it go. So just because you close the chart, that data is held in your temporary folder and it will add up. It is possible to let this number add up to the point that you can lock your computer up. I know this from firsthand experience because I've done it at 16 gigabytes and I've locked my whole computer down with data. Every backtest you run on NinjaTrader does not release the data just because you're done. It holds it until you close your platform. So if you're like me, and if you're running 24 charts this morning, testing all of them and trading live on some, then when you get to this point, it's going to start causing you problems. This is usually the point where I start seeing corrupted historical trades coming in. When you start getting over about 4,000 here, some of the trades will sometimes start coming in corrupted. And the only explanation that I have is where a CPU or NinjaTrader itself is struggling to process these things. Okay, it's a thing and it will happen. So when you're doing back testing, make sure that you don't go over that number. The second thing is, we go back to my chart here somewhere that's got words on it. The second thing is, on a back test, make sure you understand what you're asking the strategy to do. Now, for some of you, this is not a big deal at all. You kind of know what you do, you know what you like, you know what you're comfortable with. And for some of you, it's like, well, I know what I'm asking it to do. I went through all my parameters and I'm asking it to do this doohickey. I'm asking it to do this thing. There are some of you who are not doing this. And that's one of the reasons I wanted to caution you and make certain that you understood what you were asking the strategy to do. Someone sent me a strategy not long ago and they were upset because Apex had closed their account down and their strategy had been making money. And they sent me the thing. I was like, okay, well, what's the deal? But they had gotten shut down. The reason that they had gotten shut down was because they traded overnight. They held a position. In both and in all of the strategies, you will see there is a place. This one's running live, so let's look at one that's not. There is a place when you look in your strategies. Number one, you're going to want to use adopt account position. And below that, you will see where there's a place that says exit on session close. Okay, does everybody see this little box? By default, we check this box. Some of you guys don't really understand what each of your parameters is doing. And some of you, and I completely understand, believe me, I get it. But you're unchecking boxes without looking at what they're doing. And this person sent me a thing and they were qualifying an account. They're doing their thing. And all of a sudden they got shut down because Optimus took a trade at late in the afternoon. And, but if you uncheck this box, it will allow the strategy to continue to trade. And it won't close the position. And that's the important thing to remember. Okay, it won't close that position out. So if you have this box unchecked, great, not a problem. Just because you don't have it set to enter up here at 3 o'clock in the afternoon or 4 o'clock in the afternoon does not mean that it won't hold a position longer depending on what the strategy is doing. So again, understand what you're asking of it, because if you don't check this box, and if it gets into a trade at 3:45 and there's an hour and a half or 2 hours before the upcoming signal, and if it didn't hit a profit target in that 2-hour time frame because the market closed, Apex will close down your accounts. So if you're an Apex guy, that we all know, they don't like it when you carry an account overnight. So make sure you understand what you're asking it to do. The same thing applies for if you're trading on either of the strategies. The same thing applies for any of the above. A lot of people have sent me a thing that said it skips a lot of trades. That's because they uncheck the box that says trade P45. If you uncheck that box, it's going to skip trades like crazy because it'll blow your mind how many qualified P4s and 5s there are in the course of a day on a 1-minute chart. There might be 20. And a lot of those signals would have worked just fine. However, if you tell it don't trade those, well, they're not going to work fine. And then you may not understand why it didn't take them. It's not that it's broken. It's that we ask it to do something that we didn't understand. Okay? So my second thing is make sure that you understand what you're asking it to do. I'm running across several folks who, of no fault, this is not a fault thing, this is just best practices, who are just going through the entire strategy list and they're checking boxes and unchecking boxes and they're changing parameters and just change a parameter, run a back test, change a parameter, run a back test, change a parameter, run a back test, change a parameter, run a back test. Rinse, repeat, wash, rinse, repeat, wash, rinse, repeat, wash, rinse, repeat. And I understand, I do it myself. But when you've got it to where you want it, you need to make sure you understand what it's actually doing. Okay? Understand what the thing is doing and make sure you're not breaking some rule that you might be engaged with either on your individual cash accounts or if you're trying to play with an Apex or a Bull and Ox or whatever. So make sure that you're not doing something that violates one of their rules. We're not responsible for any of those things. And again, you just understand what it's doing, and that's a very avoidable thing. When you're live testing, okay, for live testing, close your platform once a week. Okay, close or reset your platform at least one time a week. Now, why do I say that? Well, that's because we have had situations and we still run into them in them. Someday I'll learn how to type. Platform. There we go. Close your platform at least one time a week. Now, for some of you, it's not a big deal. A lot of you guys that are trading Apex, I know I have 10 Apex accounts myself, and Apex will shut your stuff down, but Apex will only close your data connection, okay? If you allow them to close your data connection on Friday and you don't close your platform, all of that cache data comes in for Monday when you just go through and hit, let's turn it back on. I'm not going to close nothing. Now, if you're trading on a VPS, unless you do a special setting, all of your VPSs are going to automatically close sometime on Saturday and they're going to shut your stuff down. Save your workspace and make sure you close your platform at least once a week. This lets go of the cache data that's in there that could potentially mess up when the data connection is reapplied. So if you've got a bunch of cache data hanging out, when the new fresh data jumps in, it causes weird issues. It just does. I wish I could say it doesn't, but it does. You may, if you don't close it down, you may see where, holy cow, my signals are all jacked up when I first turned my data on, but I didn't close my platform. Well, that's because it's trying to correlate or collate the old cache data from last week and the current data that's being forced in there at this moment. And it will cause problems with your NinjaTrader. If you will close it down at least once a week over the weekends, you won't have this problem nearly as prevalent. Okay, this is a thing that has come up several times. Those are my biggest things to watch for. So make sure you have clean data. Remember, we have the only indicator in the world we're actually using historical data to identify and to drive our indicator signals, and our Optimus is reading the indicator signals. If we get bad data in, we're going to get bad data out. Let's make sure that we do those small things to refresh our charts and refresh our data. If you do, these things go a whole lot better. I've had a lot less problems by just doing the whole restart platform thing. I'm probably the world's worst for this. There's times mine will run for 10 days at a whack. And then I get all mad because I look down, I'm like, oh man, I don't know what's going on. It's acting weird. And sure enough, restart it and everything works fine. So keep an eye out for that. I know it's nice to be able to turn on a strategy and just forget about it forever, but that's just not the way Ninja's going to work. You're going to have to restart your platform at minimum of once a week. On the ones that I've been running every day, I've gotten where I do mine every 3 days. I just turn it off, turn it back on, and just hit the go button and turn them back on, let them run again. Okay. So again, just some common best practices to go by. Some of the quick things, I'm just going to talk very briefly about them. We have had a bunch of bug fixes, as I mentioned earlier. We've done a bunch of execution bug fixes. We've done a lot more calculations in the background to try to match our historical versus our real time. In the last, I don't know how many hours we've spent going over every trade that you guys have supplied the templates for that are different kinds of oddball settings, stuff I never thought about, which has been good because it gives us more stuff to look at, and we have fixed everything that currently is known. As of the time that I'm speaking, my programmer just dropped in a fix, and looks like we have finally got a fix for the old templates. So watch for another update to be out later this afternoon. I will have to test it first to make sure, but it's Rachel maybe get to it before I do, but we should have you an update out this afternoon to make it where you can we're trying to fix this template thing. I don't know what it is, but it will be fixed today. For any of you who are having that issue, I haven't seen it the first time, so I can't honestly say. But all of that to be said, thank you for your patience. Thank you guys for, again, being patient. This update has taken a really long time, and there's a lot of stuff in there. There's a lot of bug fixes in there that some have been carrying over for the longest time, and some that just came up recently. And again, just continue to plug along. I do have another request just as I get off of here. Number one, any questions? So if you have any questions at all, drop out and let's talk about it real quick before I get my last dissertation here. One other thing I'm going to talk about. It was a lot today. Today was a lot. When it comes to, there's a lot, I mentioned this in the Discord room earlier, and guys, positivity, I will say positivity goes a lot further than negativity when it comes to getting results on stuff. And we are trying our best to get things fixed as they come up. It's a lot better if just don't go just yelling my name in the Discord room and think I'm going to look at this chat box. That's just not how I do things. I don't do the chat thing. I don't do it on this or anything else. It's just not what I do. However, if you go into the Discord and if you will fill out a service ticket, then Rachel gets a service ticket. If there's a process we're putting in place, it goes to her, it goes to me, it goes to the programmer. We have checks and balances and we go through. We're trying to get a lot better about fixing things in a way that we can track them and we can understand them and we can know what they're doing. And that way, that way we can get it fixed. And it's a lot better to do that than somebody drops me an email and says my junk's not working. It creates a whole chain that kind of circumvents the process. And if you just mention it in the chat group, it ain't going to get fixed until somebody fills out a service ticket. So please use the service ticket things that we put in place for that, and it will make it a lot easier for us to continue to identify when things come up. We can get them addressed and we can get them moved forward. Okay, all that to be said, let's take a quick look at Guardian. All of you guys are going to end up with this if you don't already have a version of it. None of you have the version that you see on my chart. That's because I'm special. So I'm actually not, but once in a while we like to dream big. Guardian's getting ready to come out with an update maybe by Friday. I'm not sure, but my hope is by Friday I can get this update out. Ted, no, it's just there's just too much there, and it's never going to be. There are some things that we will never have solved opinions on, and no, we're just going to go with this for now. So this is Guardian. Some of you have not seen this before. Most all of you have heard tell of it. Some of you have already had some experience with the V1. Okay, I'm on like V19, 20. So I've been constantly testing and constantly going through and modifying and getting this up to a more usable level where we have the graphics and where we have things that are easier to identify and use. So what Guardian is going to be able to do, Guardian will be coming out very soon. Again, some of you already have a version of it that doesn't look like this. But what Guardian is doing is Guardian is going to be able to take your SIM data, apply it, and then trade for you. And this will be able to help limit drawdowns in whatever account that it is applied to. Guardian has the ability to upscale your trades. You will feed in data into it. We will set a pre-done threshold on it and then send them out. And then Guardian will actually take or skip trades based upon the equity and the mathematical probability of winners versus losers and an equity curve based on the account. And so this is what Guardian's able to do. So one of the things that we're able to do now, and with the update that I'm working on, is you're going to be able to actually see where your equity is in the line of the graph. And we have a function where you're going to be able to see or not see the actual trading account in relationship to, in this case, you're going to see what your trading account has done in relationship to what the original startup account has done. So there's a lot of stuff coming out on Guardian. Probably, the honest part is probably not until next week. I doubt I get it out before then, but probably not until next week. But this is Guardian, and this will be coming out. You can use the Guardian as a manual solution, or you can plug your Optimus directly into your Guardian and let it roll. And then Optimus applies live trades or sim trades based on how the actual account performance is within the parameters that we see here. So this is Guardian. So again, this for those of you who have it, there's been some weird things with loading some files and whatnot, and I haven't had an update to it because I've been working on getting the update out for Optimus. So now that the major part of the Optimus update is good, I will jump back on this. And again, hopefully today's already Wednesday. So or Tuesday. Is today Tuesday? God, what is today? Today is Tuesday. So maybe Friday. So we'll see what happens between now and then. One last thing I would like to mention, and Ted brought up a piece of it, and I had it on my notes here, and I'd forgot it until he actually just mentioned it. One thing I would recommend, and there's been a lot of stuff back and forth about what kind of back testing do we do, and there's actually a couple of things that I probably should talk about when it comes to the back testing on the Optimus side. So we do a back test to give us a general expectation of future performance. So if conditions are exactly the same on the future as they were on the historical, we have an expectation that this is the kind of stuff we should expect. Now, a back test should be as accurate as possible, but it is not an end all. One of the two steps that get missed or overlooked the most often when it comes to a back test and when it comes to live trading and when it comes to anything like that, those things that get overlooked the most are, number one, when do you start? When do you stop? And I've just had this thing cranking along, so I have no clue what it's actually doing. But there's a couple of things I want you guys to think about. Number one, once you have your settings the way that you want them, it is a very good idea to forward test for at least a couple of weeks to, number one, make sure it's doing what you expected it to do. It may or may not be performing the way you expected it, but you should be able to see the strategy itself is doing its thing. In the particular example that I have on this 5-minute chart, I can see that I turned this on. I don't know when I turned it on, but I turned it on earlier. When I turned the strategy on, it moved up, it stopped on time, and it has made the move down. And now we've been watching the open equity in this position for a while. This is a forward test of a back tested strategy. There's a gentleman, I guess Steve is in the room here, been running a similar strategy to this, and it's made money every day. I don't know if it's the exact one, but it's made money every day for the last 4 or 5 days. And I get emails from him all the time that we should hire George as the guy to help us do back testing, because his back tested strategies are making money. Great. A forward test on any back tested strategy is always a great idea, so that you're able to see the performance and see if that performance is continuing. That's number one. Number two, when do you start to trade? Now, if you guys are like me, and if you guys are like the overwhelming majority of people who get started in doing this, and then we come through and let me find another chart here. Then we come through, we get started, we get it moving. Is this one even on? It is not on. Let's turn this one on. I'm going to use it as an example. I really don't know what it's doing. We'll change the settings on so many of these things. I'll have to go through and play with them. It is now trading. I'm going to do a quick back test on this thing and let's just take a peek. So in this particular MNQ strategy, which some of you in the room will recognize because it belongs to you guys, not me. When I'm looking at this little strategy, the little strategy makes money. This combined with another strategy I've had running for several days, for the last 2 weeks, actually, has made money almost every day. One of them has. So one of them made money and they've offset each other some days, but almost every day they've been green. Now, this doesn't have a whole lot of data on it. The strategy doesn't trade often. It doesn't have a whole lot of data. When you've done all your work, we can tweak this thing 9 ways from Sunday. We all know how to do this. I turned it on just to run nonstop. So if I turn it on where it turns on at 8 o'clock in the morning, or at 8 o'clock in the morning, let's look. I'm going to tweak it just a little bit and set it more along the settings of what it was when I got it. And again, I turned it on and I set it to run nonstop for testing. So if I turn it on to where it starts running at 7:30 in the morning, I'm going to go to strategy performance and I'm going to go to historical. Comes on at 7:30 in the morning on a micro chart, and all I want to see is the equity curve. Now, I don't have a tremendous amount of data on this chart. Okay, it only has a couple of months of data, 60 days, I guess, is probably what I got on here. Based on the chart that we see before us right now, again, this is all we have to go by. We can do an extensive test and we can load a lot more data and we can do a lot more with it. But just based on what I have here, Ted, based on the chart that you see in front of you, when would be the best time to start trading this chart, start trading this strategy? When would be the best time to turn it on live? Mike, Robbie, what do you guys think? Based on what I have here, when was the best time to turn this on and let it run live? Yeah, that's exactly right. May the 22nd. You are exactly right. Now, if we're able to look, and again, I don't have much data on this chart, but if I take this chart, and this is where everybody gets mad, so I'm telling you ahead of time. If I take this chart and if I'm able to measure, just roughly measure, from the amount of money it made here, which is whatever that number is, I can't even read it, $550. And this strategy had a pull down of negative $225. And then it started to move up again. The best course of action for this strategy is not to start trading as soon as we turn it on. The best course of the strategy for this, or action for this strategy, is to wait until we have seen, turn it on and let it run forward in a forward tested mode, and let it run until it achieves this amount of drawdown. Because that is the historical maximum pullback of the strategy. So you don't start trading it, and everybody wants to tweak it, and we all love to see this big green and it's straight up, and oh, I love this thing. The idea is that we should be able to quantify, here's how much it can draw down. Here's how much it does it. And if I just leave it alone, when it draws down that far again, I can now start to trade it here, and I can only have to limit or risk my account this much. So let's say $100. My account draws down more than $100. Then it has exceeded the maximum amount of historical drawdown that I've seen before. but it's going to pull back this much again. It's going to happen. Now, if I loaded 365 days of data to the chart and we took 20 minutes to do it because everything else I have running, we may see this occurred 2 or 3 times. We may see it only occurred once. But this is all the data that I have to work with. So whatever you work with, your best course of action is to do your test, get your performance results where they're reasonable. Don't curb fit them to the max. Set your parameters and then turn it on and let it run in sim and let it run. And wait until we see it draw down. At this point, when it gets to here, then I can start trading live. Does that make sense? This is the number one thing that I see most folks with auto strategies do that I think is incorrect. This is number one. This is the least followed guideline I ever teach because you got to wait. Does this make sense, guys? So if I optimize this thing to the nth degree, and everybody wants to do it, I can do this in a second. I can take this crazy chart, we can turn it on entry time, and I can put it over here and say, oh, let me just see, oh no, I shouldn't be trading at 7:30. I should start trading at 8:30 because it'll give me better performance. And I could cut out 10 o'clock and I could cut out 11 o'clock. I don't even do that. I look for clusters of action, and I want to see a pullback. It shouldn't be a straight up equity curve. It should not be. Okay. It should have a certain amount of maximum drawdown. When I hit that maximum drawdown, this was the most drawdown it occurred over the entire course of the chart, by the way. This was not a single trade. Okay, the way NinjaTrader does this, these are all daily values, and that's a hard thing for me to sometimes absorb over all of the stuff that is on this chart. This is the maximum out of all of my trades. Okay, it's a strange calculation. The other thing that I like to look at is this number. So when I'm building a strategy, I want to see that number one, my winners are at least 1.5 times the size of my losers. I did this with somebody probably here in the room a week ago, I guess. And we did it on, I think we did it on a gold chart. And this number, we on a gold, like 15-minute chart or 5 or I don't remember what we did. But whatever, I don't remember who it was with now, so many of you guys. But whoever I was with, we did this, and we focused on this number right here, more so than anything else. And it still had a drawdown. This thing wins 49% of the time based on the information that we've got. There should be a drawdown. If you have a model, if you have tailored your chart to the degree that, let's do 8:30. If you have tailored your chart so closely that your strategy performance just goes straight up. Well, you turn it on, you dummy. Come on down here. You got to hit the enabled button when you do this, by the way, in case you was wondering. I'm sure I'm the only person in here that's ever done that. But if we tailor this thing till it just goes straight up in the air, which is fine to do, but then we need to give it more and more data to realize, even if I trade less, somewhere around the 22nd was still the biggest drawdown. I'm trading less hours. I'm optimizing this to the nth degree, but there should be a drawdown, maybe 2 or 3 or 4. I don't know. I've actually not done any testing on this particular one beyond what you guys see. This is 90 days of a 4-minute chart. Let's do 180. I've not done it, so we'll see if it doesn't blow up. And hopefully it doesn't blow my computer up. When you do a lot of presentation, Oh, come on. Now it's locked me up. Give me a minute. When you do a whole lot of stuff and you're presenting, it sucks a lot of CPU power. So is there any, while I'm waiting to see if the chart's going to reload with the 27 other charts running, is there any questions about this? There we go. It may come back. Again, I'm harping on this because it is the number one thing that I see people who are newer to trading strategies do. There we go. That should give us at least something else to look at. Okay, perfect. I love this. So I can see that this thing could pull up and down a lot. There's a lot of information. When you see red on your chart, don't get excited. When you see red, understand that there are times in this curve where earlier we were only looking at, remember, we were looking at from the 23rd, 22nd range, somewhere along in here. This is all we saw. We saw it from around here to here and then up. We didn't see anything else. So adding more data gives me the ability to understand that this thing will have times where it will accelerate from, this is $700 up to zero, up to 100. This is an $800 positive move. Once it draws down beyond anything beyond that, I shouldn't be trading it anyway. We should be waiting. This is the management part of strategies that's hard. It's just hard. This is what Guardian is designed to help us with. Okay, Guardian will shut your accounts down and it will continue to trade in sim until you start to make money again. Now, Guardian's never going to make you more money, but this is something you can do manually, but it's hard. But it's important that we understand it happens. It's going to happen. It always has and it always will. Anytime there's no human interaction involved, there will always be a drawdown. But we should use this information to our advantage and know when to start and when to stop. Okay, this is the key to making any auto strategy work well. Doesn't matter whose it is. Now, we are considering putting in another program, which we'll see how it works. There always is the question that comes up of, well, how often do I keep the same settings? I don't have a great answer. I really don't. I think you probably keep the same settings for 2 or 3 weeks. You should reevaluate them at least once a month or so. I don't know that for a fact. I do know that I'm on a mailing list for a couple of other companies that do similar things to what we do. They sell auto strategies. And every single one of the other companies that I follow, and I don't follow any of them closely, but you know what they all have in common? They all send out a new template for their strategies every about 3 weeks. So about every 3 weeks, and these guys are the kind of guys, you don't get to tweak their stuff, I don't think. I don't own their software, but I do follow along with some of the stuff that they send out. I do own their software, but I own an indicator. I don't own their strategy software. But about every 3 weeks, I'll get a note from them saying, hey, we've updated our templates, and these are your new updated templates. So everybody else is sending out updated templates too if they're managing stuff. Maybe it makes sense that we do the same thing. So I don't know. It is something that Michael and I were discussing yesterday, and we might be considering putting in a program to do that if there's enough interest in doing that, because it is expensive to continue to do that forever. But that is something that other strategy companies do. And what they do is they look and see where they are in the curves, I'm sure, and then they got a guy who makes an adjustment, and then they send it out to all their new people. Again, I get them about every 3 weeks from 2 of these people. So there's things to think about. So I want you guys to consider, again, don't tweak your strategy to the nth degree and just look at the last 10 days of data. You need to be able to see how much of a pullback is going to happen historically. If you don't, you really don't know when to start, and that's the key. Does that make sense? That's, for me, I think that's probably one of the biggest keys of anything that doesn't require human intervention. So, okay. Any final questions? Where's the service ticketing thing? It's in Discord, Mike. There's a Discord, there's a service tickets in the Discord group. I probably should have had Rachel come in here and explain exactly how to do that, because I honestly don't know. But I know that people do it because I mean I get sometimes 2 or 3 a day, anything from licensing to why is this, or a screenshot, or a color, or I mean, we get them pretty regularly. So I can't tell you exactly where it is, but it's somewhere on the Discord thing. Because I do, like I say, I know they come in pretty regular. So trading view is like a lot of them. So, okay, ladies and gentlemen, if there are no other questions, thank you, John. John said it's labeled BTTTFT support. Blah, 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 blah. If there are no further questions, keep an eye out for this update. We will have a webinar when it comes out, and I'll talk in great detail about everything on the Guardian side of things. You guys all have the latest, greatest. We will be sending out the update today, the patch for the templates thing. That'll be fixed today. I already got it, but I haven't tested it yet. So, because you guys have been with me, and I can't do that while you're with me. So, if there is nothing else, all hearts cleared. And thank you all for your great support. Thank you guys for hanging around. And I will look forward to seeing you on the next run around, the next update. Until then, be safe out there and have a great day.